I think there's something for everybody. I mean, people will point to the year-over-year revenue, which is staggering in terms of its growth, and then other people will point to the sequential sort of flattening of margins, which I think is also pretty interesting. I've said it before, the magnitudes now, I think, of the raises in terms of revenue are getting smaller and smaller on an just on a percentage basis, and at some point, the market's going to take notice. It's not an indictment of the company. I mean, obviously, the numbers are staggering. It's an indictment of the valuation.
It's a law of big numbers, too. You can't keep adding revenue at that kind of rate, right? I mean, at the rate they've been doing. Eventually, it's got to slow.
Yeah, I mean, although they've done it for the better part of the past 2 years. Listen, I think Guy makes a good point. I mean, clearly, comps going forward are going to be a bit more challenging. But if you kind of look through some of the segments of the business, they really deliver. You talked about autonomous, you talked about gaming. Clearly, the focus was on data center, but they also delivered on some of those ancillary areas that were areas of concern. We're talking about gross margins type of flattening, but just to keep in mind, we're still talking about 76, 77% gross margin. So that is by no means a negative there. And then I do think the one thing that I would point to that would be a marginal negative is perhaps the concern around the Blackwell chip. They've shipped some samples, and then they're kind of tweaking the design a bit, and all of those things speak to perhaps you might not be able to realize that revenue in the time frame that one would think. But across the board, again, this is the bar was quite high, and they still managed to deliver, beat, and raise.
All right, Dan, I want to get your overall thought here, but I'm going to pose it in the form of a question that I asked another guest earlier today about Nvidia. Mm-hmm. We know it has a lead. Mm-hmm. Does it have a moat?
They do right now, and part of that is this CUDA software, overlay to what they're doing here. So a lot of folks who are the buyers of these chips have gotten very embedded with this technology. It's going to work as an upgrade with Blackwell. I just say this about Blackwell. I mean, they're talking about Q4, shipments, maybe a few $1 billion. It's kind of a rounding error when you think of it at $120 billion in expected revenue this year. So we want to see how this thing ramps if it gets pushed out a little bit. I'll just say this about the comps, very difficult as we suggested. We'll talk about the sequential increases that they're seeing in revenue growth. Like these guys said, it's getting smaller. But one thing that's really important, last year, in the Q2, they had 100% revenue growth year over year, and it kept on going higher to next quarter up 200%, then 265%. So what's happening here is the exact opposite. Q1 this year was up 262. This quarter was up 122, and then it's supposed to be 77 and 56. So the comps are really important here. I don't think valuation is that important if you're looking at the out year right now, because a lot of folks who are very bullish on this stock, they think they're going to continue to outperform. So the thing I would just mention is that, it just didn't hit the whisper numbers on this quarter and the guidance. And so you could say that's a bit cautious, but they're not always solving to what the street expects. You know what I mean? There is consensus. They want to beat that, but they're not going to get in front of what they think, the street or investors are certainly feeling about it. So again, with the stock up 150%, we're looking at this thing down 4%. It's a rounding error.
So Dan says the company not only has a lead, it's got a moat. Guy says the sequential revenue growth is coming, and you make the same point, and that investors and the valuation investors are eventually going to notice. What is it going to take to make them notice?
I think they've been too good. That's the headwind that they have. They've been too good. They've set the market too high. They've set the bar too high for themselves. So Guy led off saying, if you would have went back and said, how does it look now from this through this prism, it would be a stellar quarter maybe, right? But now you look at it and you say, what have you done for me lately? And it's still knocking the cover off the ball. It's just not in a point of reference or relative to where it's been. You could poke some holes in it. I don't think you could poke a big hole in it. Look at what it's doing after hours. It's slightly below the 50-day moving average. 120.66. We saw that push through, and then it just bounced up again. So there are people who, A, want to trade it, there are people who want to own it, and there are people who want to take this to the grave. They still have 85% market share.
Yeah.
That's basically your moat and your lead, to Dan's point. So until someone really knocks them off, the Blackwell chip, they're going to have people who are going to take the Hopper chip, and they're going to fill in the blanks there. People have to wait for the premium. The premium name in the chip space is still Nvidia. They still are on top of the hill, but things got a little bit ahead of themselves, as they always do with everything.